Alrighty, welcome to one and all to the weekend video. The highlight of your week, I'm sure. Let me get my glass of wine and let's get rocking and rolling. Okay, so this week I'm going to introduce the three new charts, the three new markets, excuse me, with the kind of preliminary wave counts that we've got going on there. So that should be something to look forward to, hey? We'll rock onto those at the end of the six usual markets. All right. So I am beat after this week. I don't know about you, but I am shattered. And wake me up if I start falling asleep before the end of this video. Alrighty. So we're going to start in Eurodollar. This is the 4-hour chart as usual. So let's get the crosshairs going here. What we're tracking here is a possible contracting triangle, most likely a contracting triangle. The only kind of undecided factor at the moment is whether this little blip at the end here is in fact the beginning of wave 5 down, or if it's in fact or if wave D is actually at this low and we have wave E extending further to kind of elongate the triangle. I think the pattern it's pretty solid either way. And let's get down to the short-term chart, the hourly chart, just to kind of to pair apart this this triangle here. So you can see that the 5-wave move there, that's crosshairs again. So we have A, B, C, possible 3 waves down in wave C, or sorry, A, B, C, and D, possible 3 waves down in wave D, and you could also view that as a larger, let's say, a double combination there. So that could be a larger wave D there, which is shown as the alternate count, and then we'd be looking at 3 waves up, which should, by right, complete below 117.90. So for next week, that's what we're focusing on is this large triangle wave 4 complete, or and do we start moving down into wave 5, or is wave 4, the triangle wave 4, going to kind of extend a little bit further? So we'll figure that out come Monday. I think either way, it's a pretty solid pattern, and we should be expecting further downside. Okay, so pound dollar. This is the 4-hour chart. Again, we've got a 5 waves down. We're kind of betwixt and between slightly on pound dollar, because the most recent low there could also be seen as wave 5 complete and wave 1 complete, or we might get an extension lower in wave 5. I'm kind of the opinion that we'll get an extension lower in wave 5 before we get a turn up in this larger wave 2. That's to be decided. Obviously, I can't rightly tell what the internal pattern is going to be. We'll have to let the market decide that. So again, we had a possible contracting triangle there. The thrust from the triangle has been a little bit better in pound dollar than in euro dollar. So let's get down into the hourly chart. So here's that thrust down. The kind of mystery we're left with at the end of the week is this move off the second extreme low or the extreme low. So which is actually the low of wave 1. For the moment, I'm going to sit at the interim low there, and maybe an expanded flat. Sorry, excuse me, an expanded flat in wave 2. Again, you could also view off the extreme low here. You could also view that as 3 waves. I reckon Monday will probably sort this one out. If we get a further impulse wave off the recent high, that'll call wave 2 as complete, and wave 3, we'll get a trigger point for wave 3 as it develops. Okay, so that's pound dollar done. Dollar yen. Oh, we're moving through these quite well, actually. I'm going to take a sip of wine. And it's not a bad one either. Santa Rita, I think. Okay, so thinking about this today, the sharp move off the high here would tend to indicate a possible three-wave rise off, what date was that? The 29th of May, off the low of the 29th of May. So this was kind of, I think we spoke about this before in one of the recent videos, whether this wave, large wave 2 here was complete, or we get a larger, whether this wave 2 in brackets was complete, or we get a larger wave 2 in brackets. If this wave, this pattern here completes as three waves, well, then that'll suggest that we get a larger wave 2. And that's what we'll be looking for early next week, is indications of how that might play out. If that were the case, then we would be reading this as wave A, 3 waves up in wave B, and then a possible 5 waves down in wave C, depending on how the pattern works out, obviously. So then we'd be calling for probably a target of 107 again, to complete, or definitely a break of that interim low. So where did that low come in? About 108. So a minimum target would be, for the alternate account here, a minimum target would be a break of 108. But that hasn't been decided just yet now, because let's get to the short-term chart to parse that out. The decline off the high so far is in 3 waves. We get a nice sharp move down, an A, and then a 3 wave up in B, and then 5 waves down in C. So we're obviously quite close to the initial in wave 1 high, so that would be the wave 1 brown. If that 111.14 is broken, then we'll switch out to the first alternate, which views this recent high as wave 3, and we're working on a wave 4. Again, we're always working with the next piece of information. We need the next piece of information to kind of fill out the puzzle that's previously worked before that. So as with life in general, we need, we're always striving for the next piece of information in our lives. So it's no different in the markets. So on Monday, I mean, there's also a possibility that this is 3 waves down, and we'll get a kind of a triangle pattern over next week. If that works out, well, then we know that we've definitely got a wave 4, and we should be expecting a higher degree move up in wave 5. Excuse me, another drink of wine, I think. So we'll wait for Monday. The first level of interest is at about 111.14. Okay, let's move on to the stocks. And we've got a little blip off the high here. It's nothing really to write home about just yet. This is the Dow. I'm still working with a 1-2-1-2 pattern. We haven't had the recent extreme high broken yet. So that was 25,400 or so. We have now a lower high possibly in place, with again an extreme in momentum, and which matches the extremes of, which actually matches the extremes of the all-time high, really. And we have the same kind of drift off momentum highs and an initial break in RSI, drift off momentum highs, and initial kind of central line touch in RSI. So we could well be talking about a pretty significant high here, given the momentum signals and the fact that we haven't had any break of this, the interim high here labeled wave 2. We also have this declining trend line, so we're hitting a kind of a trend line resistance here at the moment. All of them in themselves as signals, we would, you wouldn't pass much heat on them, but together, I'm again at this point where I'm thinking the risk is quite high. I know that we've had rally after decline after rally after decline, and people are tending to call this a contracting triangle. I'm not there. I'm not there yet anyway. I probably won't get there. But for me, I think the risk is way too high. and the cards are stacking up on the bearish side. Okay, so let's get to the hourly chart rather than the 30-minute chart. I'm still counting that as 5 waves down in a possible wave 1 in gray, and then 3 waves up, contracting triangle, 5 waves up. So you have a 3 triangle and 5 in wave C to complete a second wave. We may be looking at 5 waves further down in wave 1 and 2. Sorry, just hold on a second. Anyway, the short-term pattern, the price obviously has to stay below 25,402, so that's our initial level of resistance. It's pushed higher and higher over the last week, and it's definitely caught me out. But we off the recent high, I think I can count 5 waves down. It's definitely in the shorter term, it's looking impulsive. We have to see how that plays out throughout next week. I mean, if we get further declines and we get a larger 5 waves down, then I think we're back in business again. But for now, I think in stocks the risk is incredibly high, and you wouldn't know it by looking at people, but I think we're looking at another significant turning point. Next week should tell us a lot. Okay, so here's gold. Today, again, we see another spike to the upside, which is encouraging. It's what I'm looking for. We got kind of blindsided by this recent spike. We got another decline, which kind of triggered an alternate count. So for now, I'm tentatively looking higher again. We're at another significant support level at 1204. Well, we didn't quite reach 1204. I think it reached 1211. It was 1211.80, I think, at the yesterday's low. But this 1204 level, if we scroll back, we can see that it was the kind of a little shelf of support there with the previous fourth wave. That was way back in July. Oh, that's a year ago now. So I'm referring back to a price level that we haven't seen for a year. So we've got this large kind of arcing pattern off that 1204 level. So we're back down to meet it again. But I think no matter which way you slice this cake, it's still a corrective pattern. And it's taken a year to go absolutely nowhere. So even that piece of information itself, a year to go to make zero net move really in the market means that whatever happened in between that is pretty much a correction. Okay, so let's get down to the short-term chart. There's not a whole lot to say about this. What we're waiting for is, again, much like the opposite of stocks, we're waiting for a signal in the direction of the change of trend. So we're looking at, we want to see 5 waves up, clear 5 waves up, and a 3 waves counter trend correction to a higher low. So that's what we'll be looking for next week. We'll continue to kind of have a focus of a turning market rather than a new bear market in gold, which many people seem to have just succumbed to believing that gold is just going to turn into a bear market now. The overwhelming bearishness in the market right now is another signal that I'm always looking at, and the fact that the opposite sides of the futures game, the COT data, is most definitely signaling an inflection point as well, and that inflection point in my mind is to the upside. Okay, so let's move on from gold, and we will move on to oil. I hope my voice lasts for this one. I have 9 markers to go through rather than 6. Another glass of wine. Sorry, another drop of wine. I'm not going through glasses of wine here. It's the one glass. Separate. It's one glass, separate mouthfuls, not one bottle, separate glasses. Okay, so the count in oil. Okay, so Here's the 4-hour chart. Now, a nice move off the recent high. If you pull apart this move off the high, you have a nice sharp move down in the central wave, which indicates a wave 3. You have overall 5 separate moves, so you could go 1, 2, 3, 4, and 5, which I'm leaning towards at this moment in time. And you have the extreme momentum high, divergence off the high, 5 waves down, break of central line, and a break of the uptrend again, basically. We now have the 50 period moving average on the 4-hour chart, the 50 MA on the brink of a break of the 200 MA, so you'd have another kind of soft sell signal at that one. Okay, so let's get down to the shorter term pattern to see if we can kind of pull apart this this move off the high. So I'm counting that as a wave 1 down, probably an expanded flat, or sorry, a zigzag off the high in wave 2, a zigzag higher in wave 2, possible 1, 2, 3, 4, 5 extension in wave 3. Again, that's kind of to be debated because the alternate count here is looking, given today's kind of flat nowhere action, this could indicate a central wave within a larger corrective move. So we have that to kind of parse through early next week. And I think if we get a break of that recent high, if we get a break higher on Monday, that will signal that the alternate count is actually the correct count. So I think we've got a decent 5 waves to the downside, and we're working on a possible 3 waves up to complete a larger Elliott Wave signal off the high. So in crude, again, I'm thinking that we're looking if tentatively bearish, if not severely bearish at the moment. So I think by the middle of next week, by Tuesday or late Tuesday or Wednesday, we should have whatever corrective rally is going to happen. We should have that complete by the middle of next week, and at that point, we'll be looking at pretty serious, possibly a move to a pretty serious move down in crude. Okay, so that's gone through the 6 normal markets. Let's move on to the new additions, which I will be, like I said, during the week, I'll be tagging the charts on without analysis for the next week or 2, probably, till we kind of, I want to test a few theories first before diving into the actual analysis. So everybody will be getting the charts, and those of who are full subscribers will be getting access to the analysis after that. So anyway, for the next few weeks, you'll be getting extra charts to feast your eyes on, eh? That can't be bad. Let's go to the S&P. This is the weekly chart in the S&P. So it's off the 2000 high. We have 2000 high, which I'm labeling as a 3rd wave, 3-wave expanded flat pattern in wave 4. So you have from the high in wave 3 to the low in wave 4, a 9-year period. Almost to the day. I mean, 20 days, 25 days in the difference. 9-year period to the low in 2009, March 2009. Then from the low in March 2009, that's more than complete wave, by the way. So that's a wave 4 complete. So 9 years for that wave to complete. I've said that 5 times now, so I think the information has gone through. So off the 2009 low, then we're looking at a 5-wave pattern to the upside to complete wave 5. So we have wave 3 high, wave 4 low, expanded flat, wave 5 in 5 waves up to complete at that February high there. And so we have a wave 5 complete, and that 9-year period again. You will notice one thing actually. We had a March high for wave 3. We had a March low. So the third month of the year, March, low for wave 4. We have if we pick out the high, we had February high. It would have been nicer if that was March, wouldn't it? So we have 9 years to complete wave 4, 9 years to complete wave 5. The high almost came in within a month to meet even the month of the year. So the symmetry here is nice. It's very pleasing, let's say. So we have 3-wave correction, wave 4, 5 waves up, and wave 5. I'm calling that the all-time high. I'm calling that the high, and from that high, we'll work to the downside. Okay, so let's get to the daily chart from the weekly chart. So that's the wave 4 low of the previous 5 waves up. So let's go back to the weekly chart. We're talking about this wave 4 here and the move off that wave 4. So that was in February 16. So we'll talk from the February 16 low. And if you go back on my own videos, well, I have another channel actually. In early 16, I was incredibly bullish. In the Dow anyway, I was calling for probably a $20,000 rally into 20,000 mark. So that's a call for another time. So we have the wave 4 low. I think we had a pretty nice flat correction, wave 4 into the December 15 low. And off that, I'm counting 5 waves up. Again, lots of people are calling this a contraction triangle. Myself, I'm not in that crew. I'm calling this wave 1 down with a pretty complex wave 2 that's most likely completing right now. Okay, so that's the 5 waves up complete off wave 4. So wave 5 is complete, and now we're looking at an impulse wave to the downside. So let's get to the 4-hour chart off the recent high. So there's the recent high. I think we have a nice 5-wave pattern at the downside. We have 3 waves up in A. We have pretty sure you could probably only call that 3 waves down in B. Off that B wave low, I'm looking at quite likely an ending diagonal. So we're 1, 2, 3, 4, 5, where wave 4 and wave 1 overlap. So you have the overlap there between wave 4 and wave 1. So we're talking about an ending diagonal is a final move within a larger trend. So I'm calling that wave C. 5 waves in wave C. The pattern is nicely fitting within a trend channel right now. We're reaching the highs of 2 trend channels. We have obviously an ending diagonal or an ending wedge, or whatever you'd like to call it yourself. The 2 trend lines tend towards each other, so that it's a contracting move. It's kind of it's really indicative of a momentum depth, to the upside. My descriptive language is coming out with the wine. So suffice to say that this market, I think, is on the verge of another large turn. Unlike the Dow, in terms of the pattern, I think the break of that previous wave A high there this week. So we had a pop above that wave A high that kind of ruled out the 1-2-1-2 pattern to the downside. And again, the Dow may even work out to be a larger degree 1-2 into a final high if we get that break of the interim high. You can go back to the chart and check that out yourself. The S&P seems to be working out wave 1 and wave 2 completing an ending diagonal. Okay, so I have the lower degree hourly or half-hour charts I haven't filled out. So I'm going to leave that for the next over the next week to start filling out the lower degree charts. So that's the S&P. Let's move on to silver. So this is the silver chart that I'm working. This is the weekly chart. And if we look back to the early 2000s, so we had 2001 lows there, about $4 in silver, and we had this massive rally up in silver up to, it was like a $49 high. So that nice 1000% increase. That was great. If you were riding that, that was fantastic. It reads to me as a 3-wave rise in wave A. So I'm calling that, you had a nice 5-wave pattern there in wave A. So that's 5, 3, and 5. And we have 3 overall waves. So 5, 3, 5. So it's a zigzag pattern. And it's 3 overall waves into the 2011 high, April 2011. And since the April high, I think we've completed 3 waves down into a wave B. So we've got 3 waves up, 3 waves down, and now we should expect a 5-wave rally into wave C, and we should break the previous $49 high, and we should fill out that trend channel. So we're looking at the wave B is 3 waves down in A, 3 waves up in B, and 5 waves down in C. And off the recent extreme low, I'm looking at a wave 1, 2, 1, 2 pattern, much like gold. So let's get into that. That's the 15, the November 5th, or what was it? December 15 lows. So the daily chart here. So that's the wave B low, December 15. We've got 5 waves up, I think, in wave 1, and 3. This 3 waves down. I've actually showed 2 different counts. I should clear that up right now. I think the most likely one is we've got a 1-2 pattern. From the lower degree chart, we've got 5 waves up. The internal pattern here is pretty damn complicated. I think we could have a double combination of sorts. So we have wave A down, we have wave B, 3 waves up in wave B, then we've got wave 3 waves down in A, B, C, D, E, wave B completed at the recent high, and now we're looking at we'll get either 3 or 5 waves down in wave C. Again, we're bottoming out. We're heading towards seriously oversold on the daily chart. Let's go down to the 4-hour chart to kind of parse out this little contracting triangle in wave B to see where we might stand from there. Again, you can see the 4-hour chart is seriously oversold with nice divergence on the RSI. The wave B, the contracting triangle, we've got the wave A low with A, B, C, D, and E to complete wave B, and now a possible 5 waves down in wave C. So 1, 2, 3, 4, and completing or near complete wave 5. Again, we've got a nice little run off the low, which may turn into something more interesting over the next few days. And that's what we'll be looking at over the next few days. That's what you need to keep an eye on in silver. Excuse my phone. The previous wave 4, internal wave 4, is 16.19, so about 16.20. If we get an impulsive run up towards the $16.50 mark, then we can probably say that the correction is over finally, and we'll start to move up off the recent lows, which would be wave C of 2. Okay, and we'd start moving up into a large degree wave 3. So that's silver. So we have the S&P and silver done, and let's move on to the US 10-year. So this is the weekly chart. This is the 10-year note prices. So I'm gonna concentrate on the price rather than the yield, just because price kind of sits better with me. For most people, it's price that sits better with in general. That's what seems to sit better with people. So off the extreme high there, we're at 135. We're looking at wave 1 and 3 waves up in wave 2. and now we've got a wave 1, 2 complete, and we're maybe moving down into wave 3. The degree of the labels might change. It's possible it will change actually, but the wave formation itself, I think, is pretty solid. Okay, so we have one off the wave 2 in brackets here. We've got 1, 2. We should be moving down into wave 3, or we should be well down into wave 3 now. Let's kind of get into the daily chart and see what this pattern is unfolding as. So we've got wave 2 high here, 5 waves down in wave 1, a corrective move up in wave 2, and then we're moving into the acceleration. We have moved into the acceleration phase lower in wave 3, but we've got this interim kind of holding pattern going on here. And if those of you who are astute will pick out that it's contracting in range, it's oscillating around the 119 level or the 120 level. So we're talking about a contracting triangle in a possible wave 3. So it's a possible wave 4 of 3. So the 4-hour chart, let's kind of pull apart that triangle there to see what's going on. So that's wave 4 of wave 3, the larger degree. So we've got the beginning of the triangle of the February lows there, a pretty corrective, pretty easy to count corrective move there. You could actually, if you take that wave itself, you could count that as a flat correction. You've got 3 waves up in A, 3 waves in B, and you've got 5 waves up in C. Off that high, so you've got 3 waves up in A, 3 waves down in B. We're going to count that as 3 waves into C, 3 into D, and a possible 3 waves complete into E. The short-term invalidation level would lie at the previous wave C. If that's broken, then we'll have to kind of visit this 4th wave here. So we're talking about 121. If that's broken, then we'll have to scrap the triangle idea, and we'll move to another type of wave, possibly a combination wave of some sort. So it is possible that off this high here at high 120.46, so about the low 120s, that we're moving down into begin wave 5. So it'll be wave 1 of 5 off that high. That's what we'll be concentrating on in the charts over the next few weeks to see if we get an acceleration lower. We've definitely got, well, it's hard to read much from the RSI here. We've got extreme highs at the previous wave C, so there's a nice divergence, I suppose, a longer term divergence developing there. In the hourly chart, we could have off that wave E high, we could have 1, 2 and a possible 1, 2 developing. So it's a bit early to say on that one. So that's what we'll be watching next. That is what I would point to watch for next week. We could be looking at a spill down into a 3rd wave. 3rd wave in pink there, so at a minor degree. Okay, so that's completed 9 markets. That wasn't so bad, was it? And I didn't even finish my glass of wine. Okay, wishing you all a great weekend. Thanks for watching. Godspeed, everybody, and wishing you luck next week. Bye-bye.